It's a little bit about me. So I'm co-founder of Full Stack Modeler. Full Stack Modeler is a training program mainly for finance people, and it's to help people work through core Excel skills up into financial modeling, and then finally up into data analysis and visualization. And we take people on a year-long journey from wherever they are, and they can be really advanced or at the beginning of their journey, take them all the way through that journey, and they come out the back end either a year later, or quite a lot of people actually stay with us a little bit longer, and they're hopefully much better modelers when they come out the back of that process. I'm also a SEMA accountant, so I've been working as an accountant for over 20 years now, slightly scarily. And then I do a load of modeling, the kind of Excel-based stuff, rather than catwalk. And I'm a fractional finance director, so I support 3 companies as their finance director on a fractional basis. And in terms of Brixx, one thing to say is I'm not a member of the Brixx team. I'm not a salesperson. I'm not here to sell Brixx to you. When I put this to Barrie as an idea, is basically I'm an enthusiastic user. I'm also a real Excel fan. So I thought it would be a useful presentation just to show you, talk about 3-statement modeling, also do that in a tool like Brixx. I absolutely love Brixx, and hopefully you'll see why that is. I use it in a couple of the companies that I work as a fractional finance director, and I've used it for one piece in particular that raised £3.5 million with a 5-year, very detailed forecast model on a 3-statement basis. So I've used it, I've seen it do what it says it does. So I just want to bring that to life, hopefully, over the next hour for you. So Barrie, I'll pass over to you just to give a quick intro for yourself, if you could.
No, thank you, Myles. I did a degree in accounting and finance 100 years ago. I suffered the joys of spreadsheet modeling, and sometimes you get your head in your hand if you turn up if you go to Austin, Texas, with a spreadsheet that's got an error in it that's obvious and as beforehand. So I came across Brixx, a tool devised for financial modeling, and because what I wanted to do is what we do today, and that is to democratize it, to make it available for anybody anywhere in the world to be able to connect their business transactions, their business activities, create a visual model, time-based, that would allow them to run those transactions through and look at the financial ramification. So really designed for purpose, and look at ramification in terms of P&L, cash flow, and balance sheet. Obviously, we're going to have a look at Brixx to some degree tonight. And
cool. So let me just talk you through the format for the next 45 minutes or so. So I'm just going to have a quick talk through what 3-statement modeling actually means. So some of you will clearly will know this, but I'll just give that just to set the frame, really, so I won't spend too long on that. Then talk about why it's important and why we should think about doing 3-statement modeling, why we need to bother with all 3 statements. I've got an Excel file that I'm just going to demonstrate briefly, so I won't spend loads of time on that, but just to show you how that would normally be done in Excel and pick out a few of the challenges there. And then we'll bring Brixx up, and obviously I'll spend most of my time just showing you how Brixx works and how that hangs together. And finally, we'll make some time for Q&A. Like I said at the start, though, if anyone's got any questions throughout, please feel free to pop it in the chat. If you're happy to, you can obviously come off mute and flag a question if you'd like to, either to me or Barrie. Or if you just want to put it in the chat, we can then pick those up when we think it's the right time. So I will get going on the main presentation. So what is 3-statement modeling? Why do we need to bother with a financial model at all? So financial model is a time-based representation of an entity or a project, and its uncertain future financial performance. So that's the most succinct definition that we could come up with. So we're always looking at something over time. Usually we look in months or years. Quite often we're going out 5 years, sometimes longer than that. We can look at a company or an entity or even just a project. There's always uncertainty. Everything we're doing is the future. Therefore, we don't really know what's going to happen as much as we think we might, it's always going to be wrong. And then it's future financial performance. So we're always looking at what is coming up in the future. And to do that, most people would think straight away about the income statement. So the first of the three statements is the one that most people know. In the UK, we often refer to that as the profit and loss account. More globally, it's called the income statement. And what this does, it shows our profitability and the movement of that profitability over time. So typically we look at revenue, less our direct costs, less our fixed costs or overheads down into our profit. And quite a lot of people, when they forecast, that's what they're focusing in. They're focusing predominantly on their revenue, and then they look at the costs associated with delivering that revenue. But what we also need to do is consider the balance sheet. So the balance sheet is the document that shows our financial position at a single point in time. So importantly, a balance sheet is a cumulative position up to a point in time. And this typically would show our assets and our liabilities, and the balance of those is the net value, if you like, of the business. So not value to the market, but the value of what it owns in terms of assets and liabilities. And then the final of the three is the cash flow. The cash flow probably gets more attention than the balance sheet, in all honesty, because people know that they have to look after the cash. But again, cash will show movements over time. So it shows inflows and outflows over time, but it also shows the cash balance at a particular point in time. And that cash balance is obviously what we see on the balance sheet. And the reality of these three statements is they're all interconnected. For anyone who's done accountancy, this is where we talk about double entry type accounting, is the flow between these three statements. The difference between them is usually things like tax, in the case of something like VAT, or timing, where we might have a sale, but we've got a delayed payment of that sale. So we have an interaction between the three statements, which then gives us a complete view of our business. The interesting thing when you're trying to model a three statement is how you do the pipe work. So in Excel, I always talk about the pipe work between my three statements. How do I connect up what's in my income statement to my balance sheet, to my cash flow, and make sure that the three of them are aligned and balanced? And to do that, what we do is we flow in pipe work, which in the Excel world is obviously formally linking between cells and linking between sheets. In Brixx, what you'll see is that pipe work is all built. So whilst in Excel, we're thinking about the business logic and the logic of what we're trying to achieve, and how we're going to represent that in a spreadsheet, and how we're going to make sure that it's linked together and make sure it balances. With Brixx, what you'll see is that pipe work section at the bottom there is already built. You don't have to think about that. All you have to think about is the items that you're going to put in, the business logic you're trying to model when you're doing that. Just to give a couple of examples, just for anybody who's not clear on the difference between the three and the flow of them. Just a really very simple example and very simplified. So anyone who is an accountant and a modeler, please forgive me for the simplicity of these, but I'm just trying to keep it nice and straightforward. So I've done a really simple event, which is we've sold £1,000. So we sold £1,000 worth of goods. That's given us £1,000 on our income statement as revenue, and that would flow down through into profit if there weren't any costs to go against that. When we record that sale, if we don't get paid straight away, so maybe we're on the 30-day terms, what happens is £1,000 will land on our balance sheet as an asset, and a current asset, and that sits in a line called accounts receivable. The other side of that will also sit down at the bottom of the balance sheet in retained earnings. But for now, just focusing on the fact that £1,000 is owed to us as a current asset. So we would need to model that through our financial model. So we show the income in our income statement. We've got £1,000 in our balance sheet. We don't yet have any cash because we haven't been paid by our customer yet. And then event two is we get paid. So the balance sheet gets cleared. The £1,000 is cleared off the accounts receivable. And the other side of that is the £1,000 hitting our cash flow. And at that point, we've flowed it from our income in month one onto our balance sheet, which sits there at the end of month 1. In month 2, comes off the balance sheet and goes into the cash flow. And when we're trying to model that in Excel, we need to make sure that that flow is working correctly, everything balances, and we're not missing anything in the journey of that. Similarly, for again, a simplified version, and this one was even worse, so forgive me, but for payroll, I'm saying £1,200 of payroll cost, which is made up of 2 elements, which is £1,000 of wages due to our employee and tax of £200. So £1,200 goes as a cost on our income statement. And then we have a liability, so something that we owe to people of £1,200. £1,000 can go to our employee and £200 to tax. When we get to event 2 is when we're going to pay our employee. So we clear that liability to our employee. That clears down that liability on the balance sheet. And the other side of that is the £1,000 hitting our cash flow. So that event now is moving through, it's flushing through our 3 statements and ending up in the cash going out bank. And then the final event is us paying our tax, which may be following month. That comes out of our liabilities and the cash goes down. So we can see the movement as it goes through those 3 statements. And that's why we need the connectivity of the 3, because we need to be looking at the income from a am I profitable perspective, the balance sheet from what assets and liabilities do I have, and then a cash perspective of when is that money going to leave my bank? Do I have enough cash in my bank to be able to cover the things that I need to? So why is this important? For me, it's all about context. So we can look at the income statement on its own, which is what a lot of people do. Just look at the profit that we've got. We can be very happy that we're nice and profitable. If we just look at that one statement, we have no concept of what's on our balance sheet. So we can be very profitable to the EBITDA level, for example, but maybe we've got a lot of assets that need depreciation, which are going to hit our net profit. And also maybe we've got a lot of finance that needs to be covered. So we've got a lot sat on our balance sheet that needs to be cleared down as liabilities. It might be that we've got really high accounts payable, so we need to pay our suppliers a lot of money, which may be not showing up in our P&L. And likewise, we might be owed a lot of money. So we might have had a lot of sales, but we don't have the cash in yet. And then finally, the cash flow brings that all together, because again, we can easily be in a position where we've made profit, our balance sheet looks okay, but the way that cash is flowing in and out of our business actually means we run out of money before we get the cash in from our revenue and the profit that we're expecting to see. So it's about putting our entire business in context. Every number that we look at and we pull, let's make sure that we look at that in the context of the other statements to make sure that we're clear of what liabilities we have, what's owed to us, what our cash position is, timings of flows, and if we are generally profitable as well. Because the other way around could be we've got plenty of cash, but we're profitably, we're showing as being very unprofitable in the future trend. That means that our cash flow in the future is obviously going to start to get degraded fairly quickly. So I've done a lot of talking. So kind of the question from you guys is probably, can you stop talking now and show us Excel and show us Brixx? So I just got 2 last slides for you. So the first is one about good practice modeling. So I came across this quote a very long time ago. It's probably about 15 years ago, and it just made me chuckle. If you ever, I'm sure you all have, everyone on the call has picked up someone else's spreadsheet. They're usually fairly horrific. This diagram fairly well shows the kind of spreadsheets that we pick up on a regular basis. There are good ways and bad ways of modeling in Excel. It's really important to think about how you build a spreadsheet if you're going to build it using good practice. There are best practice principles out there and best practice standards. And I highly recommend, if you are going to model in Excel, to learn how to model to a really good standard, or use a tool like Brixx. And one final thought before we jump on to into Excel is very famous phrase in or quote in our industry from George Box, which is all models are wrong, some are useful. So What that means is every single model that we create in whatever tool that we create is going to be wrong because we are forecasting an uncertain future situation. So let's get stuck in. Sure, let me get Brixx up. So Brixx is on screen. So Barry, can you see Brixx, all right? Is that on the screen? Brilliant. So what I've done is I've created an empty business plan. So this is what you would see if you were on the free trial, which Barry will talk about later. We can basically open up a file. It does a bit of a pre-build for you just to give you a sense. That's completely customizable afterwards. But just to give you a real high level view of the way that Brixx works, on the left-hand side, we've got our hierarchy. So here we've got sales, operating costs, employees, marketing. This is completely customizable. You can do whatever you want in here. I've used this very differently in the two companies that I work with. And then once you're in sales, for example, you'll see here, we've got two sales groups with some different products. We can add different components and modules. It's a real kind of point and click type interface where you can add products, business units, copy things, turn things on or off really easily. And it's just literally a turn things on or off and enter details into a preset area rather than having to really think about how you're doing that as you would in a spreadsheet. If I take things like employees, if I click into there, you can see here we've got two examples of management team and staff. I'm going to go through an example of that. If I go into operating costs, you can see you can lay out all sorts of things. And just to say, these are all the same module. We've just renamed them rent or business rates. And I tend to use Xero a lot, so I tend to connect up the nominal code description in Xero to the name of it in here in Brixx, which just makes things a lot easier to use. So what I'm going to do is go through the same journey that I just did on the slides and in the spreadsheet and just show you how easy it is to do what I was talking about. So I'm going to go into a product. So when I click on that, it opens up this menu. I've got some choices on how to put income in. One thing I would say is chosen by Barry and his team, this is relatively simple, which I see as a good thing. There's a company I use as a brewery, and we take some of the complexity off into a spreadsheet and then input the resulting numbers in here. It is relatively simple in that it's income per month, or you can do income units times a unit price. And we can also use a table to choose where to put things. So from my experience, what we do is use the income with a table, and you can copy from and paste from Excel directly into here to get that revenue line in. One of the things that's common kind of perspective in modeling is revenue in particular is the most bespoke area in a business. People get to their revenue number in 1,000 different ways. Some people go insanely granular, which is what we do at the brewery. We go right down to the detailed level. Some people will start really quite high level. So I think it's pitched at the right point, which just means that if you need that really complex detailed stuff, you can do that in a separate sub process and then bring it in. So all I'm going to do is just put a very simple number in here. So I'm just going to enter £2,000 in here. So I enter £2,000. That's my income shown. I can then go onto my payment terms. I'm going to say I'm going to delay this by 1 month. So just as I did before, it's going to come in a month later. I'm going to ignore tax entirely. So I'm going to hit save and close. So when I hit save and close, it's going to close my main window. I'm in the reporting section at the moment here at the top. So I can now see my profit and loss account, which is the same as an income statement. And I can see that £2,000 exactly as I did in my spreadsheet and how I did on my slides. That £2,000 flows down my P&L, down into my net profit and into my retained earnings, which will go onto my balance sheet. When I go to my balance sheet, again, it's going to have done the pipe work for me. So I've got £2,000 in accounts receivable because I've got 30-day terms. So it's a 1-month term. So I haven't received that money yet. So it's sat in accounts receivable. And at the bottom there, I've got my retained profit. And it says very lovely in green at the bottom, balanced, which for anyone who does financial modeling, I know we don't have financial modelers on the call, but yeah, when you look across the bottom there, to have that balanced is a delight. And then what we see when we move into month two, it drops into cash. So it comes out of accounts receivable into cash, and then moves along. So I don't have to worry about the pipe work of that. I've just put the sale in and off it flows. And then finally into cash flow. Again, in cash flow, when I look into there, no cash in January. I can see I'm empty in January because I've got those 30-day terms, but I do have the cash coming in February. And then down at the bottom here, it's bringing that balance forward for me all the way along. Another thing to say is at any point you can drill down. So when you've got a lot more detail going on, you can drill right down even for cash and see where that cash came from. So it's come from this product in this sales group in this category. So you can trace any number all the way back through, which again, as a modeler is so valuable. And also as a fractional FD for me to be able to say, well, why is that number that? I can dig in and then go back to my assumptions and make sure I understand why that is. Cool, so that's a simple sale. So I'm going to follow the same process that I did before. So I'm going to go into a cost of sale now. So if I click in this cost of sale module, I can now, again, have a number of options. I'm going to stick with percentage of income, and I'm just going to put 20% in there. And for the payment terms, I'm going to make it 60 days. So 2 months terms. So our customers pay us in 1 month. We're actually going to pay our suppliers after 2 months. And I'm going to hit save and close. We go back to the profit and loss just so we can watch that through. So we've got £2,000 of revenue, £400 of cost coming off. So we're at £1,600 of profit. So in that month, we've made a profit and we're very happy. I go to my balance sheet. We can see our accounts receivable, just as before, is cleared down. But now what we've got is an accounts payable, which sits there for 2 months because I put it onto a 2-month term. And then it flows out of cash and our cash balance drops down. And we can see our retained earnings is sticking at that 1,600. And then finally, going to our cash flow, you can see there in our cash flow, we've had the £2,000 in month 2. The cost has gone out in month 3. All of that is done for me. I don't have to work out how to do that. If anyone's tried to, well, actually, I don't think there were modelers on. If you've ever tried to model payment terms, it really is quite complicated. You end up using some functions like offset in quite a complicated way, which isn't very pleasant. With this, I don't even think about it. I just say, yeah, 30-day terms, 60-day terms, and it's done. One of the things I was saying to Barry when we were talking about this session is the amount of times I sit here and just kind of laugh, I chuckle to myself, just how easy it is to put these things in. Because what you find is you're just putting items on this left-hand side, and then the right-hand side just happens. And that's such a delight compared to trying to see your model go out and the red flag comes up and then you're trying to work out why your balance sheet doesn't balance. You just don't have that with Brixx, so it makes it really nice and easy to use. We have a question, but I'm going to save that one for a little bit later. I'm just going to carry on through. I'm going to add a few more costs in now. So I'm just going to go to my operating costs, and I'm just going to put some rent in. So again, just to show how you would do this. So put some rent in. I'm going to put £500 a month, and payment terms, I'm just going to leave it go out. So no delay on this one, goes out every month. Maybe it's on direct debit, just goes straight out, save and close. And we will go to the P&L again. When we look at the P&L, we're now starting to build up, and we can see that operating expense going straight out, and everything is starting to build now as we can see that mix of sales and operating costs. What is really lovely though is if I go up here on the left hand side and just click on this button here, I can turn that whole sales block off. So I've now just killed all of my sales and the related cost of sales. So now I just have my operating expense running through. So £500 a month going out, nice and simple. I go to my balance sheet. Again, it's just 500 going out each time. I don't have any cash. So I've now defaulted to short-term borrowing. So Brixx is even clever enough to go, you haven't got enough in your bank, you're going to have to get some short-term borrowing to cover yourself. And we can see that balance grow. And we can see our retained profit growing as a loss cumulatively as well. So I'm going to turn that one off again. and actually, sorry, let me just go to cash flow because I haven't shown cash flow. So cash flow, fairly obviously, is just going to show that 500 just going out the bank as we would expect. So I'm going to turn that one off and go to employees this time. And on employees, all I'm going to do is go into one member. And again, I wanted to show this because, again, this is one of those things that can be really difficult. So just talking from a UK perspective, so if we have an employee, that employee comes in at what we would call a gross salary. And on top of that, we pay employers' national insurance. So we pay a tax on top of that employee cost. And then on a monthly basis, we deduct tax and employee national insurance from that employee, and we take that from the employee, give them a net wage, and then all of those three elements of tax that we've collected, we then pay over to the government as tax. And modeling that in Excel is quite complicated because, again, you need to work out, there's various thresholds for your tax. So you've got to work out all the thresholds to work out your national insurance. You need to separate them all out. Your gross cost goes to your P&L, your balance sheet holds the liabilities for some of the time, and then your cash flow has the net wage go out at one point, and then your tax to the government going out at a second point. So what I'm going to show here is just one employee. I'm going to put them on just on £12,000 a year. I've got the option to make them a direct cost if we want. So in the profit and loss, we can push it up from overheads into direct costs. I'm going to give them a pension. So I'm going to say they're on a 3% pension, and I'm going to turn on national insurance. And you can see here, so these thresholds are the UK thresholds. So it does all of that for me. I don't have to worry about calculating national insurance thresholds. I can see here that the national insurance is going to be delayed for a month, which is standard for the UK. And we're actually going to pay our pension and salary to our employees straight away. So I'm going to hit save and close there. Just before I do, just to reiterate, what's on that screen is really hard to model. To get that accurate and right is quite a lot of work. So let me hit save and close. Cool. I will come, so Kate, I'll come to that question in a sec. So I'll come back to that one as soon as I've just demonstrated this. So from a P&L perspective, so even though it's £1,000 a month, you can see we've got £1,066.29. So it's done the pension and tax calculation for me. I can drill down into that staff cost. So I can go in, see that their management, see that it's the general manager cost that's in there. If I go to my balance sheet, I can see that it's got the employee cost payable. So the line is holding for me there. Again, because we don't have the cash in our bank, it's showing that we need borrowing as well. So it's holding that balance for us across the way and then paying it out. And then from a cash perspective, you can see the employee being paid, and we should then also hopefully be able to see the tax element of it. They're probably under tax actually. So yeah, they probably don't have tax. But if there was tax for them because they're within the thresholds, they're not actually going to receive any tax. Kate, let me come to your question. So if I bring up the general manager, so Barry, I may need your support on this one, but let me have a look. So with the employee modeling side of things, presumably the table would allow you to enter the number of employees changing to reflect higher throughout the year. So yeah, absolutely. So Barry, I will come to you just because you're much better placed than me. But we have the ability to do something like this with the table. But yeah, Barry, do you want to just answer that one directly? I think I've shown it on the screen, but
super explanation. What we're asking here for is the input and the description. We can give more meaning to that. That general manager could be Sue Smith, and then as you see that flowing through the accounts, you see the Sue Smith elements. Actually, there's sensitivities around employees and names, so probably not. But you can model what you're asking, Kate, in terms of your model on the left-hand side with the inputs, the structure. You might be modeling 6 staff. So you might model by group of staff rather than individuals. And you can tailor this accordingly. You can input it. But if you take the staff on the left-hand side, you can add components here. You can add more employees. You can give them more meaning. You can model in groups. What?
And Barry, you raised a really good point there. And so the two companies that I use this for, one, we literally lay out every member of the team because it's quite a smallish team and very distinct. The other company, which is website design, they'll have 6 people who are developers on the same rate. So therefore they can model in I've got 5 now, I'm going to need 6 later, which was kind of your point, Kate. The point Barry was making as well is you could have those as member of staff on the left-hand side, and then just have them starting at different times within the year. So did that answer your question?
That the employee object, or the employee in this case, could be linked as a direct cost of sale. So if we don't win that project, we're not going to employ those people. And then that project sits there on the timeline. And
of the numbers we're flying, all I've done is change the revenue to now have £2,000 go out every month. So we've got the £2,000 of revenue, the cost of sales going out, our staff costs, and our rent. And we can see there at the bottom that we're making a profit every month. So again, just going back to this concept of the context of our 3 statements, this is currently showing that we're making a profit, so we're nice and happy. When I look on my balance sheet, I can see that I've got equity all the way along the bottom, so I'm kind of happy. I've got my accounts receivable. We're looking fairly happy there. But when I go into my cash flow, what we'll see is because there's a delay in us receiving our revenue, we can see now that we've actually got a closing cash position that's negative. And actually, if you look along the bottom there, you'll see at no point in this year do we get to the point where we've got a positive cash position, because we've got that £2,000 offset.
you're bust. Yeah.
Sorry, say that again?
You're bust.
Yeah, exactly. You're bust. And that's the point of the 3 statements. And like the final thing to show, which Barry alluded to really briefly, if I go to this tab here called timeline, again, this is something that's really nice from a modeling perspective. I can take this general manager, and maybe I'm going to say we can't afford a general manager in month 1, so let's get them to start in month 2. So I've pulled that over to the right-hand side. When I go back to my reports, what we'll see is in the P&L now, that person is going to start a month later. So our staff costs have moved. And if I go to my cash flow now, I can see that by moving that person 1 month, I can actually get myself into a position of being profitable. Obviously, what I've done here is a very simplified version, very small numbers, but hopefully you can see how you can build your business up really simply on the left-hand side. And then you have that ability to say, and I've honestly done this in real time, looking at a pub to kick off and saying, well, what happens if it moves 3 months later? You just go on the tab, move the timeline, and see the impact of that for your 3 statements across a 5-year window as well. So it's really powerful in the way that it does that, and things that are really quite difficult in a spreadsheet perspective. I know Barry will talk about that in a sec. There were a couple of questions, Barry, to call out. So the first one was from Theda. Is there an import functionality for Brixx? So I know there's an export, but can you import, I presume, your structure into Brixx?
So the short answer is yes, with 0. At the push of a button, it will bring that structure in.
An export functionality, so just for the opposite of that, so you can export all of the reports out and then use those for reporting. So Thomas, and Thomas is a full stack member. Thomas has asked, is there a multilingual version? And I guess that goes for not just the language, but also probably the accounting rules, because I think I'm right in saying, Barry, it's UK focused at the moment. Is that fair?
No.
No? Okay.
So a lot of those thresholds and tax rates and payment terms and this sort of thing are obviously the things that define the differences. So first of all, from a language standpoint, it is English language at the moment. In terms of the framework of the software, in terms of the content, you named that. So if you have descriptors of your income groups, of your costs, etc., you can input in whichever language, and it will output with those tags. in that language. We will be producing language versions. It's not at the top of the list right now. And it's, you know, an opportunity for us to grow. But thank you for that question, because it's something we really do need to do. It is planned, but not at the highest priority.
I just demonstrated my amazing mastery of the French language there with the word produit in instead of product. But yeah, just to show that you can put anything in there. Cool. And final question at the moment from Kate. Does the system allow you to summarize and review all the assumptions made? That's a really good question. So so what we've got over here on the left-hand side, can we output that, Barrie, as input?
So it's fairly easy to see your assumptive base because of that pictorial representation on the left-hand side, but you have to go through it. And I take the point, it would be nice just to have a sheet.
Yeah. So Barrie, I'm just going to pick up a couple more points coming out of the chat because it's really helpful. So Theda's said, agreed with Kate in terms of having that summary of assumptions for investors would be really useful. And yeah, it's a really great point. I like that one. Andrew, you asked about what formats. So just to show you that very briefly, up here on the right, so you can do a PDF. You can drop any of the reports, and you can also choose whether they get put into one document or separately, which is really helpful. You can do PDF or Excel. And Ping, I've never tried, Barrie, I have to say, but I guess it drops an image of the yeah. So it's really flexible in terms of what that can drop. You can also choose what year to drop, and if you want it grouped monthly, quarterly, or yearly, which again is really helpful from just being able to drop that straight away. I've just shared Barry's email directly in the chat, so if anyone wants to get in touch with Barrie, they can do that. And then I've just got one final question, which I can't resist, and then we will have to wrap up because we're at time. So Irvin has chucked the AI bomb at you, Barrie. So do you plan to build AI into Brixx? If you put AI in Brixx, I don't know what I'm going to do with myself, because it's going to be it'll be ridiculous. But yeah, what are the plans for artificial intelligence and Brixx?
Depends what you're trying to achieve with the AI. There are so many facets. I think we don't want to get carried away with creating a black box that predicts your business going forward. I think people still want to connect their transactions to the output, but the way we compile, the way we build, I think there's multiple applications of AI, and having a black box. I never like the thought of having, no accountant likes the black box. I put the numbers in and we'll take care of your predictions for you. Well, okay, I'd sort of rather make my own predictions if you like.
Yeah, so Irvin, I'd be really interested in what you had in mind. So where I've seen it quite nicely applied, Barrie, is more about the build part, if you like. So using natural language engines, because when we say AI, there's a lot there in terms of what that can be, and quite often the natural language engine is quite nice to say, right, build me, this is what I need, build me a blah 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 in natural language, and out would pop out the left hand side. But I agree with you, I wouldn't want one of the things I struggle with a lot of cash flow forecasting with some of the tools that are out there is it is trying to use intelligence to work out what's going to come in. And for me, that's so risky. Again, bit of a control freak being an accountant, but I'd much rather be putting those in myself than trust AI to work it out for me. So awesome, right? I'm gonna call it there because we're at 8:20, and I know my dinner is waiting for me. So my stomach is rumbling. So yeah, thank you all for joining and for taking the time to spend that hour and 20 with us, and hopefully it was useful. Barry's given out his email address. He's really happy for you to contact him directly or contact the support team. Try a free trial.